IQVIA case study part 2. In the first video we did on IQVIA, we talked about how there's a structural change in the business driven by clinical trial complexity and increasing patient specialization in patient populations. And what we're seeing is revenue visibility has declined in terms of backlog to revenue conversion at IQVIA over the last 5 and 10 years. And we're at about a 25% conversion and 48% visibility today. And the 5-year average for visibility is 51%, and the 10-year average is 54%. We think that is what's driving the dislocation in shares of IQVIA. And so in this video, what we want to do is drill into the driver of what we believe is causing that change in visibility. And what we think that is the increasing clinical trial complexity and the increasing complexity with patient populations. So what we've done is we've created a grid here to kind of illustrate a few metrics around how clinical trials and patient populations have changed, and we think it vividly illustrates why visibility has deteriorated over the last 10 years at IQVIA. So we start with patient populations. In 2016, we call it the primary care era. I think it's mostly focused on diabetes drugs, drugs where it's easier to find a lot of people to do a clinical trial on that indication. Fast forward to today, we're in the precision rare era because we're focused on very specific oncology targets and a lot of cell therapies. It's harder to find patients. So patient populations, large and common, now they're niche and genetic. You look at trial enrollment times. In 2016, we were looking at about a 7 to 9 month enrollment time. Now we're looking at a 22 to 24 month enrollment time, which is a 210% increase in duration. That's problem number one. Problem number two is site throughput. In the primary care era, we were looking at about processing 3.2 patients per month. Now we're only processing about a half a patient per month. That's a negative 80% decline in velocity of patients. The third issue is you look at the screening failure rate. In the primary care era, we were only losing about 10 to 15% of patients that we were screening for clinical trials. You fast forward to today and we're losing about 50 to 80% of the people we screen because the targets are so specialized and these are living cell therapies. It's difficult to find patients to run in these trials. And that's a 400% plus increase in friction. Now, the last one is you think of logistics, and you can't see it here, but the logistics model in the primary care era, we're talking about traditional modalities like pills and shots, your Wegovy's, your weight loss drugs. These are simple things. Whereas now we're moving into this more autologous versus allogeneic development of cells. Like you in an autologous environment, it's high fragility. You need to be able to grow these cells, and sometimes they only work on a single patient. That patient who's given the cells can only use those autologous cells. It has been very hard to move from autologous to allogeneic, where we can just proliferate these cells easily and then put them across an entire patient populations. So what you can see here is the issues around filling a trial, completing a trial, just from patient perspective, has increased significantly. Duration is up 210%, velocity is down almost 100%, your friction is up 400%. This is a recipe for, hey, things are not going to convert as quickly as we used to 5 or 10 years ago. And ultimately, this driver of that revenue visibility degradation is what's driving the significant dislocation in stock price. Thanks for watching.